Let's get right to it as usual. I want to talk to you today about the CPI inflation reports released this morning for November, as tomorrow, Wednesday, December 13th, is the big meeting when the Fed are going to tell us what they are planning to do about rates. I'm going to save some time and sum things up for you rather than explaining the whole process. I know you guys prefer it direct and digestible. And in the words of Bruno Mars, lucky for you, that's what I like. So here we go. I'll start by stating that ultimately, the Fed wants to get inflation rates down to around 2%, but we are pretty far from that right now. And so there's a journey that we need to go through first to get to that level. And so it's important you understand this process as it's going to explain, if we apply some common sense and a little bit of strategic thinking, as to when we can expect some major crypto pumps into our bags. Before today's report, there was a consensus report at around 97% chance that Jerome Powell and his boys at the Federal Reserve are not going to raise rates. After today's reports, it has now fallen even lower, odds being around the 98.5% that rates will not raise. Now, this obviously isn't guaranteed by any means, but usually it's a pretty good indicator of what we can expect. We've been wrong before, but this time around, I think we're probably leaning in the right direction. As always, we want to look into the future, into 2024 and beyond, into 2025, to help us plot a course for success. Now, looking back historically, when facing spiking inflation, the way this usually plays out is in four steps. One, the Federal Reserve starts to raise interest rates, as we've been seeing over the last few years. Step two, they slow down the raising of rates, but are still raising them, as we've also seen play out. Step three, the pause, with the vast majority of institutions and investors believing now that this is kind of where we are. And so step four would be the big pivot. Basically, the Federal Reserve starts cutting rates, and so borrowing money becomes a lot cheaper, putting a lot more money in people's pockets, which is a great thing for assets as more people have more available funds to buy them, therefore pushing prices up. Crypto is an asset, crypto prices go up. You're following me, right? March 20th, that is when the next meeting is planned for the Federal Reserve, with many believing that that is going to be the start of step four, the pivot, where they start lowering rates, where the Fed are going to lower rates, which is basically around the corner, right? We're talking about 3 months. However, I'm going to go on record and say that I think, in my opinion, it's a big ask for that to happen so soon. And I really believe that the Fed is going to hold on to that pausing period a little bit longer. But be prepared for anyone planning to watch the report announcement tomorrow and the following press conference and Q&A. I believe tomorrow's press conference after the report will see Jerome Powell not even mentioning when he thinks cuts will begin to happen, keeping things pretty close to his chest and stating that it's way too soon to make those decisions and all of that stuff. However, if I were to make a guess, going from history and applying it to the current market conditions, I would guess that our pivot probably starts in the summer of 2024, around the end of kind of Q2, Q3 arena, right? But more importantly, what does this mean for crypto and your bags? Essentially, this means that as we are well getting into the bull cycle, when euphoria is at an all-time high, people will also have money in their back pocket to make crypto investments and pump even more economic energy into the space. But where things really get exciting, in my opinion, is the potential for inflation to play a huge role in folks' motivation to put their money into this asset class. The Fed wants inflation rates at 2%, as I mentioned. But to me, this seems extremely ambitious. And in a worst case scenario, mainly for the folks who are operating in fiat mostly, in terms of where they're storing their net worth, we may see inflation still rocket past that number as rates are cut. And that's going to force many to protect their wealth by buying more crypto assets. The marketing machine around crypto at that time is going to be at an all-time high because a lot of those institutions would have taken their positions, and they're going to turn on the media machine to start motivating more and more people to start buying their own bags, right? When we talk about the perfect storm for crypto, it's this type of macro climate we're referring to, or certainly what I'm referring to. big money coming in via facilitators like the ETF endorsements, for instance, while also reading the landscape and hedging themselves more heavily with crypto protection from the devaluation of the US dollar or other fiat currencies. The cherry on the top being retail investors following suit, albeit probably much, much later in the cycle, as we always see. We don't want to be part of that group, of course, which is why we're in accumulation mode now. We are in the right sector, folks. If you are looking to not just see huge gains, but also protect the net worth you already have, it's inevitable to me. And maybe if you look at things, you'll think differently, but I'm sure the majority of you, when you break it down in such a simple format, are going to agree with me. And I hope this helps. Like and sub to stay in the loop, and we'll get right back to it in the next one.